Hello guys, earnings season on China have just started and today the earnings season kick off with JD earnings and Chinese stocks are soaring, and if you want to know what happened on JD earnings and with the rest of Chinese stocks, just continue to watch this video. So I'm gonna I'm not gonna do a deep dive on the JD earnings. I'm just gonna do a resume for you guys. So JD just reported a small increase on revenue, so their growth are slowing, but they have a lot of profits this quarter, and their free cash flow was really good. So another news that came with the earnings was they are changing their CEO. They are promoting their chief financial officer, I think. It will start on September. So that might be a good change. I believe that's bullish for the stock. They might return to their growth. I don't know, but one thing we know, their growth are slowing. So I believe that's what we can. That's the conclusion we have when we read the report. But they are making money. Their business are stabilizing, and I believe they are in a good way. In a good way, they are improving. That was a good start of the earnings season for Chinese stocks. So let's talk now about JD. JD is a really good company, not fast growing anymore. They have a lot of cash, which I like. They have really low debt, which they can pay with their free cash flow in hand. They had they are trading around 10 forward P, which is low, but I don't like their margins. They sell products, they sell other companies' products, which is always a low margin business. But one thing that was good for their business, their service increased a lot this year. So even though their revenues increased 1% year on year, their revenue from selling goods were down year on year, and their service increased a lot. I mean 20%. So that makes their revenue to be up this year. So they might starting a new business inside JD, and maybe that can improve margins, which is always good. Um, they are growing, still growing. I don't like their margins, but they have low debt. The return on invested capital have been low. I believe it's because they have been investing a lot, and they are been investing a lot in their growing. So we might get a higher return on invested capital for the future years. I'm hoping that. So they have some competitive advantage. I read in the report they signed a new deals with Longines and Tesla. They are selling goods for Tesla in their platform. They are selling Longines watches, which I really like the brand. So they have been free cash flow positive. They are returning a lot of capital to the shareholders. They just started a dividend of 1.8%, which is really good for a really good yield for a starting dividend. They are doing a lot of buybacks, and their valuation, in my opinion, is fair. If you look on to our discounted cash flow, I'm not assuming they will grow above 20%, or I'm assuming around 10%. I will, for my base case, I will assume a 12% for the next 5 years and 8% for the last five. Since this is not a fast growing on or a high margin business, I'm doing a median PE of 15, 3% margins. I believe they can improve their margin, but I'm trying to be conservative here. And my discount rate, bear in mind, since this is a Chinese stock, I believe we need to have a higher margin of safety. So I use a bigger discount rate than normal, so I use a 14% for my base case. And if you look into our bull case, I'm expecting JD to improve their margin to 4%, 15% for the next 5 years, and 10% after that. 17 PE and the discount rate of 16. Bear in mind, I believe I'm being really conservative on their growth rate. I'm expecting China to grow a lot in the next years, and the reopening are not being fast enough, but I do believe they can start to grow again. So, and for my bear case, I'm using a 10%, 6% for the last 5 years, a P of 13, a discount rate of 12%, and their margin around 2%. And we came with an intrinsic value of around $48. So JD is trading around 37 now at the moment. They were trading around 34 in the beginning of the day. I do believe they are still undervalued. It's not one of my favorite companies on China because I don't like their margins. I do believe they have some kind of moat, and the people really love JD and the products they sell, and they sell a lot of good brands there, and they take a fee for that. So I do believe they have their space in China. They will continue to grow. It's a good company. They have a really good management team. They are shareholder friendly, but they are in China, which is always a risk. So I believe they are undervalued. Maybe there are better opportunities in China. It's not one of my favorite companies. I do prefer Alibaba, Tencent, and Pinduoduo, which we already talked in the channel. So, but I do believe JD will turn into a good investment. I do, full disclosure, I do own the company, but that's good news for China. Chinese stocks are back. Maybe you can continue to recover, and that's my analysis for JD. I hope you liked it and find it useful. So if you liked it, please subscribe, guys. Bye.